Hello, everyone. Welcome, and thank you for joining us on Valentine's Day with the Market Report. I hope you and your loved ones are having a great day, celebrating a day of love, and of course, love for the Bitcoin and crypto markets. My name is Joe Hall. I'm going to be your host today, and we are once again joined by our resident experts, Marcel Peckman and Sam Borgi. Now, Sam Borgi is a business editor at Cointelegraph, where he brings a decade of experience in economic analysis and financial market writing. Marcel Peckman applies 17 years of experience trading derivatives, options, and futures to the crypto derivatives markets. Hello, gentlemen. Marcel, how are you doing today? We should change that 17 to 18 years, shouldn't we? It's been an extra year, no?
Yeah, I've been in the crypto industry for 5. So if you compound that, it's been or 6, I don't know. It's been 23 years working in the finance industry. But you got to remember, when I joined crypto industry back in 2017, all my colleagues from financial institutions and banks said, "You guys are crazy. You are abandoning a good career on Deutsche Bank and UBS and BTG and etc." And I said, but I don't care about that anymore. I think everything about it is a lie, is going to implode. So they all thought I was going crazy. And now, many years later, a handful of them are beginning to ask, is crypto eventually going to die? Is this stuff going to be around forever? Is crypto a scam? They still have no idea what Bitcoin and cryptocurrencies are, but they finally are getting to understand that it's not going away.
Good, yeah. Maybe some of them don't think you're crazy as well. We can hope.
No, they still
Sam, good. It's much better. Life is better when you're a bit crazy, especially on Valentine's Day. Sam, I love the cute hearts by your name. How are you doing today?
Well, I'm kind of heartbroken. I asked you to be my Valentine, and you said no. So hasn't all come up Millhouse today. So, but it's okay. I have my Bitcoin, and I'll manage, I think.
The one true love. If you're bored at all today, don't forget to ask ChatGPT to write you a Valentine message from your chosen Valentine. This is the pinnacle of Valentine love. Now,
so
I
bet there's some Valentine coin. I bet there's some Valentine coin or AI Valentine coin where you can get a AI girl that talks to you. Crypto will handle everything in time.
Oh God! As you can see today, we're having a nice Valentine-themed show as we're 14th February 2023. But we're also here to talk to you about the markets and all those interesting things occurring in the markets news this week. So, of course, the Markets Report on its brand spanking new channel. This is the first one. Is the place where you will find information that's not available elsewhere on the web. And today, Sam, Marcel, and I will discuss what's been making headlines in the crypto space, as well as the wider business and financial markets. We're here for you guys at home. We're here for you guys on Valentine's Day to try to help you navigate through these trying times and also these times full of love. And we're looking forward to interacting with you in our new channel. So please give it a like or click the subscribe button because we're going to be here every Tuesday at 12 p.m. Eastern time. That's midday Eastern time to talk to you about the crypto markets and to guide you through them. And also, we're giving away a 1-month subscription of Cointelegraph Markets Pro, which is worth $100. So please make sure to drop a comment, leave a like, DM us on Twitter, for example. Keep the conversation going if you're interested in winning that Cointelegraph Markets Pro subscription. Great. So here's a breakdown of today's show. We're going to kick off with the market roundup, which is a weekly highlight video. Then it's meme time, the funny part of the show. There's market news updates, a quick crypto tip from me, a tip then from Marcel, and then finally, the Cointelegraph Markets Pro subscription I talked about earlier. That's when we're going to do the giveaway. So yeah, that's the show today. Don't forget to take advantage of the 20% off Markets Pro subscription code in the info box just down below. And yeah, let's take it away, unless we've got any other love messages for me, gents, or should we kick off with the show?
Let's go. Let's kick it off.
Let's go. Weekly roundup video. Take it away. Wow, I didn't realize that we're back over the 1 trillion mark. That's good to see, I guess. But yeah, never week in crypto, eh? We had all sorts of things going on, from money sent to charity for the Turkey earthquake, which was of course devastating, and hope things improve over there, to SEC dominating the news as the US might be looking to cut off that crypto innovation. A lot to dig into this week. But before we get into the serious stuff, we need to check out the memes, which the team cleverly put together. But don't forget to send your comments or your questions for us, and you might be in the chance of winning a Cointelegraph Pro Market subscription. So yeah, let's take it away with the memes, guys. It's a classic. Family members asking you about crypto is total pain everywhere. Average age. Politician is discussing crypto regulation. This is, but beneath every meme, there's a bit of accuracy, and this is a bit too truthful, isn't it?
Yeah, definitely. I think that's Biden.
Yeah.
I can get some of Biden over there. Yeah.
He's just trying to sniff something, isn't he? Sitting back in the chair, having a good sniff. I find that all I see of videos of Biden is Biden sniffing things. But yeah, that could be him. January 2030, me heading to shop to buy some chips. Wife, don't forget to buy the dip. Oh gosh. Why does this hit so emotionally? The price of Bitcoin in 2030 is going to be a lot higher. 2011, you're an asshole, John, even. Other guys are starting their own business and you're just messing around with some weird Bitcoin thing. You seriously think you're smarter than them? We need to break up. There's no future staying with somebody like you. 6 years later, hi, John, how are you? What was the price in 2011? What was the price now in 2017?
That's when it was about to peak. That was almost around the blow off top there, I think. Yeah.
There you go. I guess that was when it started to make the mainstream headlines, and the ex-boyfriend or girlfriend or whoever it was. This is actually a poignant one for Valentine's Day. Hodl onto your loved ones just in case they are a Bitcoiner, because who knows, in 6 years' time, you might be calling them up and texting them as well. Okay, gents. So the first article we're going to look at this week is all about the SEC. There's been nothing but SEC news back to back since Monday of last week, and it'd be really good to break down for the viewers what it actually means, and if all these poor Americans should be running to the hills, as what we is what some people are suggesting. First piece here is the SEC lawsuit against Paxos over BUSD baffles the crypto community, as members of the community were confused and argued that people buying the stablecoin were not expecting it to go up in value, because of course stablecoin is supposed to be stable. I'll just give a quick intro here, and then I'll ask the two guys with me a few questions. So on February 13th, the United States Securities and Exchange Commission, or the SEC, issued a Wells notice to Paxos, alleging that BUSD is an unregistered security. On the same day, the New York Department of Financial Services, or the NYDFS, ordered Paxos to halt the issuance of BUSD. It all happened quite quickly. The outrage from the community was, I guess, to some extent understandable, but I want to get the analysis from Marcel and Sam here today. How big is this news, firstly? Sam, should we be worried about the fact that the SEC seems to be going around playing whack-a-mole with anything related to crypto? Is this the end of crypto, as a lot of commentators are calling?
Well, I wouldn't say it's the end, but I think it's a really, really stupid approach that the United States is taking. I think it's really squashing innovation in the United States around crypto. Going after stable coins in this manner is very odd. I believe Paxos is actually fully backed, and I don't know. Do we buy that stablecoin with the expectation that's going to double in price, or triple in price, or quadruple in price? No, that's not what the purpose of a stablecoin is. So I think we've been seeing this now for quite a few years. Bitcoin is not going to be affected in the sense that Bitcoin is outside of the regulatory sphere of securities regulators in the United States. I mean, Bitcoin's been deemed sufficiently decentralized, so I don't see any particular negative action toward Bitcoin, but obviously Bitcoin is part of the broader crypto space. Usually Bitcoin leads the market in terms of how the rest of it performs, but maybe this regulatory uncertainty is going to affect price action in the short term. I think we saw that a few days ago when we saw Bitcoin fall from the 22K range down to around 21,000. So a little bit of a pullback because of the regulatory FUD. Overall, I don't think it's going to be a good thing for the US. I think it's not going to be a good thing for anybody who's building any kind of crypto products or services in the country.
Interesting. I
I,
mean,
I
you
have to
might be
disagree,
forgiven for
Sam,
thinking that
completely.
Bitcoin's a. Oh, yes. Go ahead, Marcel.
No, go ahead, Joe. Go ahead, Joe. What were you saying about
No,
Bitcoin?
I was just going to make a. No, I was just going to make a joke about the fact that you'd be forgiven for thinking that Bitcoin is a stable coin currently, given the way that it's trading. A huge amount of volatility in the Bitcoin space for quite a long time. But Marcel, sorry, let's hear this disagreement.
No, I disagree with 2 points. First, Sam says that it's going to be a short-term impact. I think that the regulators are only starting. They're starting to peel what's easier for them. And for instance, in Binance US dollar stablecoin case, they admitted a couple of weeks ago, a month ago maximum, that at sometimes the Binance US dollars on the Binance chain on the BNB chain was unbacked. So they have some kind of bridge that you can easily swap the Binance US dollars on Ethereum chain to the Binance US dollars on Binance chain. And due to some operational error, those stable coins on the Binance chain were unbacked. So they effectively created a security based on a stablecoin. They did wrong. They had to register before creating that. So I think that they committed some kind of mistake. Maybe they just gonna have to pay a fine. Maybe just they gonna have to hire a third party to do the bridge and not handle themselves, so it can be audited and maybe even done by an US entity, this bridge, instead of Binance themselves, which is an offshore company. So I don't think that's something that it's short term. It's only the first phase of the multiple regulators. They're going to be narrowing down on cryptocurrencies, and especially the largest coins such as XRP and Binance. So I think we're only beginning.
Wow. Okay. So it could be some troubled waters ahead. Fortunately, the Cointelegraph reporters have done some of the heavy lifting with this article, and they've actually reached out to some lawyers regarding what this could all mean. And we had this article here called "Are Stablecoin Securities?" Well, it's not so simple, say lawyers. A classic Cointelegraph headline. As one lawyer said, that while stablecoins are meant to be stable, buyers may possibly profit from a range of arbitrage, hedging, and staking opportunities. I mean, this is kind of going back to what Sam was saying earlier. You buy a stable coin because you expect it to be a stable store of value in the sense that it will stably lose money over time, as the dollar always does and always will do. But here, the issue is that a report from the Wall Street Journal on February 12th revealed that the SEC is planning to sue Paxos Trust Company in relation to its issuance of Binance USD. This is the news that we know. And the lawyers came in here and they said that these platforms, sorry, that's the Gensler quote. Here it is. Lane stressed ultimately that each case will turn on its own facts, particularly when adjudicating on an algorithmic stablecoin rather than a crypto or fiat collateralized one. So even within this stablecoin spectrum, there are lots of different sort of facets at play here. Sam, you made an interesting point earlier about the fact that Gary Gensler considers Bitcoin to be sufficiently decentralized. Of course, Gary Gensler actually used to teach Bitcoin courses at MIT. They're still available on YouTube if people want to learn about Bitcoin. He actually teaches it really, really well. Can we safely consider Bitcoin to be separate to stable coins in this sort of mess?
I think so. I think the guidance on that has been fairly clear, even though it's, the regulators' approach to crypto has been clear as mud. I think that a lot of the issues, retroactively penalizing projects because you failed at providing any kind of regulatory clarity. I think that's what's happening right now. And regarding the stable coins, I mean, we do know that arbitrage does happen on stable coins. It's been happening for years now. But also people should realize why stable coins were created in the first place. I mean, the early stages of the Bitcoin market or the crypto market, people weren't able to access liquidity. They weren't able to access their traditional bank accounts. Stable coins were a means to bridge that gap and to allow actual traders to access crypto assets. So stablecoin was a way in which to to meet the short term needs of traders. Regarding how this regulatory approach is going to go, I mean, I don't know how it's going to shape up. I thought that the XRP action, for example, was going to be a slam dunk for the SEC. It seems like that's not necessarily the case, but I don't know what's going to happen with respect to that particular ruling. But overall, it seems like the entire environment in the United States probably isn't going to be conducive to positive growth. Now, if they provide regulatory clarity, that could be it's going to be a net positive, but it's going to depend on what that clarity is and where the lines are going to be drawn. I think Bitcoin is outside of it. I think Bitcoin has been deemed to be decentralized. But again, given the entire regulatory action around the industry, negative news around regulation could impact Bitcoin's price and Bitcoin's price action moving forward. So that's kind of how I'm assessing things right now.
Okay, interesting. And Marcel, how about yourself? What's a best case scenario that you could foresee coming out of the SEC's clamping down on all of these securities? And what's your worst case scenario? What should we perhaps prepare for?
Okay, so let's assume that the SEC follows what New York has been doing, which is basically saying if you live in New York or if you're American, your IP is going to be blocked to access XYZ service, even if it's a DeFi service. But if they deem that the service is doing some kind of illegal security and registered security, they can block the IPs coming from United States. They can subpoena. They can say, well, the developers of this DeFi project or the Paxos itself, it's going to be banned to issue more coins. But in the end, even if they ban that, there's a whole many ways, multiple ways that cryptocurrency users can use to circumvent that. For instance, the DAI algorithmic stablecoin is one of them. But there are other ways, like doing synthetic hedge, which means like selling future contracts, future derivative contracts. So you stay with your Bitcoin or Ethereum in wallet, but you short the position using options or using futures, using derivatives. So there's really nothing that, as said in last instance, that the regulators can do to ban some form of decentralized cryptocurrencies. Yes, it could be harder for the investors to get their hands on the stablecoins, but it's not going to be impossible. So I don't think that's something that's going to be a permanent negative for cryptocurrency. Just the opposite. I agree with Sam.
Okay.
When you have some regulation, at least investors can decide, investors and the companies themselves can decide, well, we can build that or we cannot build that. Because right now, there's no transparency from the regulators, so they can't decide.
It is fascinating to be in a space that the regulators are desperately trying to understand and then regulate the innovation, but it happens at such a pace that they can never really effectively keep up because you're effectively, government versus ideas. It's an awful game that's always going to be rigged from the start, in which the ideas are always going to outstrip the government because they just don't have the resources to do so. So yeah, it's an interesting thing that's playing out here. I guess for people watching at home, is there any advice you'd give them, or any ways you'd be like, don't touch stable coins for the time being, or avoid earn products? Or I mean, obviously we can't give out financial advice with this channel, so let's talk hypothetically. But is that okay? Now is not the time to look at algorithmic stable coins because of the way the SEC is reacting. By the way, of course, people like me are not concerned because I'm not based in the US. This is purely a US-centric conversation, which is really important to highlight here. It just happens to be that the US is the largest economy in the world, and its actions have consequences and ripples that are felt as far as Portugal, where I am, or the UK, or Canada, or wherever else it might be. What do you think, Marcel?
Well, Joe, two things. First, the other countries, especially Europe, they tend to follow the regulations from the United States. So if you feel that your position in stablecoins is too big and maybe your exchange is going to delist them, I would send them to your cold wallet, because at least it doesn't get blocked. And if you have them on some earn product, move it to a DeFi platform. So at least, even if the exchange gets blocked or the website is out of sight, you can still move your coins on DeFi. So I'm not saying I recommend any of your products. I'm not recommending any stable coins. I'm just saying that if you have stable coins, move them to your cold wallet. If you use earn products, move them to DeFi projects.
Interesting. Yeah, I like that. I mean, ultimately, it comes back to that sort of Bitcoiner mantra, the idea of don't trust, verify, and not your keys, not your coins, because anything you hold on an exchange is an IOU from the exchange. It is just a piece of or an Excel spreadsheet which represents what you might have if you're lucky enough to withdraw it. So always good practice there. And of course, yeah, just like to stress, this is not financial. We're just talking about these eventualities. And Sam, anything to add there before we move on to the next story, which is, of course, price and markets related?
No, I think one of the best hedges against all this uncertainty is just to simply buy Bitcoin and to stack your sats, because if you eventually want to access all these alternative crypto markets, you can if you have a sizable Bitcoin bag. I mean, you could always trade, So I would just continue to maintain my HODL position until there's some sense of regulatory clarity, which might not come in the short term.
Good stuff. Yeah, if in doubt, always buy Bitcoin, not financial advice. Righto. Okay, let's move on to the second story of today, which is about Bitcoin itself, the big dog, returning to $22,000, which is the least volatile based off the US CPI reaction. These 5-day highs for Bitcoin price come with a narrow trading range as US inflation broadly conforms to expectations. The CPI is, of course, the price index, what a lot of traders and the wider financial TradFi markets look at as an indication of how well, or one of the factors to indicate how well the US economy is doing. I'm just going to read one little excerpt here. So that reflected the CPI data itself, which broadly conformed to market expectations. A moderate exception was year on year, which ran hot at 0.2% above the envisaged 6.2%. So we still live in a world where your money devalues at roughly 6 to 7% per year. But right now, that's conforming to what we all expect. Interestingly, the price did pump, if you look at it on a very narrow candlestick chart sort of metric. It pumped from what's that, 21,600 to 22,080. So it did make it back into that Bitcoin 22K territory. What about Marcel and Sam? Sam, were you at all surprised by this information today that that the CPI came in as pretty much expected and Bitcoin did a little bit of a pump to reflect that?
Yeah, I think there's a few important takeaways. I mean, one of the more important takeaways is that inflation has continued to moderate now from the June high. So I think we have now 7 consecutive months of a moderation in the CPI, which again conforms to what I said months ago, that I think that the CPI rate peaked in the middle of last year. So that's, I guess, a positive in the sense that the massive inflationary spike that we saw, we're still living through it, but the worst of it may have passed. On the flip side, though, this is a game of percentage points. It was still higher than expected. We were expecting to see a slightly more pronounced moderation in the CPI and the core CPI. They came in slightly above expectations, but still, year over year, the growth has been smaller than it was the previous month. So I think in terms of the market, you take a look at the TradFi market right now, stocks are down. I think this may reinforce the idea that inflation is not coming down fast enough, which means the Fed will have to maintain a hawkish tone with respect to monetary policy, interest rates, and we know that how that could impact the market. So that's generally how I took it. There's the positive and there's the not so positive. But overall, we're still in a situation where the CPI, which already understates real inflation, is still growing over 6%. year over year, which is pretty astronomical.
Mm. And as you say, it does understate the real inflation, as prices do still feel a lot higher than 6% higher than they were, this time last year. And Marcel, what's your takeaways from this? Is there anything interesting you reckon that there's underlying or that's untold in this story?
I think there's no way to celebrate even if the inflation goes down a little bit, because most of the deflation that's coming, it's because of unemployment. It's because of companies not meeting expectations. So there's less consumption, there's less production. So the economy is going down. So one cannot say, even if inflation came down to 4%, well, that's excellent news for the markets and economies. No, even if deflation goes down, there's no reason to celebrate. So I think that the investors' focus should be the United States debt and the repayment. Like next year, they're going to have to pay almost $1 trillion of interest rates on the debt itself, on the $32 trillion of debt. So I think that's where investors should focus. And that's why I think that scarce assets such as land, real estate, Bitcoin make a lot of sense on that environment.
And another scarce asset, which we've got to give a shout out to today, is love. Love is very scarce, and another thing that should be hodled over the long term. You brought up a point there, which I found really interesting, which is about the US debt. US debt is in trillions of dollars. What are their options when you're in such an environment? There seems to be no attempt from governments around the world, not just the US, to reel in the debt here. What tools do governments have available to them to manage this debt? What can they actually do to continue to instill confidence, but also manage these huge debts? These huge debts which just grow and grow.
Well, from my view, they have two ways, three, in fact. The first one is to cut expenses, which they're obviously not going to do it. The second one is to make your currency weaker against foreign currencies. So the weaker US dollar is good for the United States because it's easier for them to pay the debt. And the third viable option would be to maintain interest rates artificially low, but that causes inflation, that causes other things that are not welcome in the economy.
Okay. I was really hoping you'd just go like this, because there's, of course, that's the other option, right? Isn't it, Sam? Money printer go brrrr. If your debt just keeps to go, then you can just keep printing it away, right? That's how fiat works.
Yeah, I mean, what are the options? You either destroy your currency or destroy the economy. I mean, it's gotten really out of hand, out of control with respect to the debt. And Marcel mentioned you can reduce spending, but are they really going to do that when you have 4-year election cycles? Are you really going to do that? You take a look at the U.S., the pie chart that reflects its spending. Where is it going to come from? You want to raid Medicare? Like that's the lowest hanging fruit is Medicare. What about the $1 trillion you're spending on the military, right? So where is the money going to come from? I'm not sure. I mean, the issue right now is that interest rates, even though they're at over 4%, which is historically still very low, the actual payment on that debt is pretty astronomical. So I don't see a positive end to this. I don't really see a viable. You want to go the Trump route? We're gonna outgrow it. We're gonna grow, and that's not gonna happen. Western countries, advanced industrialized nations, don't grow 5, 6, 7% annually. It does not happen. So I guess we wait and see for the inevitable.
Nice, lovely, optimistic note to finish on there. Why don't we check out, or should we check out our last article of the day, which is an amazing pun, I've got to call it. It's called Out of the Ordinary. Bitcoin average block size hits all-time high. This is going to be an excuse to talk about some sort of internal metrics to the Bitcoin blockchain. Block size refers to the actual sort of weight in megabyte terms of each block, which is added to the Bitcoin blockchain on average every 10 minutes. But some can be really quick, some can be, an hour at times. Basically, Gareth Jenkinson, who's on the EU team with me, very good reporter, he said that Bitcoin's average block size has hit an all-time high of 2.5 megabytes following the creation of Ordinals protocol in January 2023. This is one of those stories which has rocked and divided the Bitcoin and wider crypto community. Some people, including Adam Back, Bitcoin core contributors, Luke Dasher as well, has been a vehement opponent of this, whereas it's also attracted lots of NFT proponents and wider crypto people to come onto Bitcoin to mint their own NFTs. We're going to have a chat now to work out, what these ordinals are, why it's so out of the ordinary, and work out if they're significant. Is this just another crypto trend that could fade with the wind, or is this something that's here to stay? I think there's an even wider question to ask as well about whether or not this could resolve the minor fees issue over the long term. But first up, Marcel, what are you minting your own ordinal? What are ordinals, and should viewers be minting them at home?
Okay, so the ordinals are an inscription on the big Bitcoin block, but it doesn't go exactly at the same place that the transactions go. It goes on a space especially created for segregated witness and for creating lighting channels and for validators and etc. So it wasn't originally designed or intended to place NFTs and etc. But it's almost a free space on each block because it has a huge discount, because it was not designed for transactions. It was only designed for security stuff. So this project Ordinal is, how can I say, it's not really cheating, but it's using this almost free space to store the NFTs on the Bitcoin blockchain. So part of the community got angry because their nodes suddenly are having to handle blocks of 4 megabytes and over. And back on the days up to 2 months ago, the largest block ever seen was 1.4 megabytes. So it causes a little bit of extra cost to run a node, a little bit lengthier to initiate your node. Currently, it takes about 4 or 5 days if you have a brand new SSD card and a computer to set up your Bitcoin node from the ground, from start. And the larger the blocks, the longer it's going to take for someone to set up the node. So it's kind of creating some division on the Bitcoin community, but it's basically an inscription on the Bitcoin block space, but not directly on the same space where the transactions are registered. So it doesn't pay a huge fee to get in.
Yeah, it's not. We've got a question in the chat there from Natas Fresas, which literally means cream in Portuguese. That's good to know. NFTs on Bitcoin doesn't slow the network. Slowing the network. Let's understand that question. Slowing the network is in terms of the difficulty adjustment, right? If blocks are being confirmed too slow, then the difficulty adjustment will rocket through the roof, won't it? Ultimately, these guys, those that want to inscribe an ordinal, have to pay the fee to inscribe it, depending on the size of it. But it shouldn't, in theory, network, or maybe I'm misunderstanding it here. Sam or Marcel, would one of you like to jump in and question?
No, it doesn't change the fact that every block takes on average 10 minutes. It doesn't matter if the block is empty or if it has 4 megabytes worth of crappy data.
Yeah, I'm trying to work out if there is some way in which it might slow. I mean, technically the miner is earning more fees because of all these added inscriptions, because, all of these ordinals come to them. I mean, still, this is really getting hypothetical, or really getting infinitesimally small with the ways in which it might slow down the network. But yeah, the way in which Bitcoin is designed, it's designed such that, every 2 weeks, if the blocks are being produced too slow, then the difficulty adjustment will go down. If they're being produced fast, then the difficulty adjustment will go up. And I don't think we're seeing any of that with the hash rate at the moment, which is hash rates ultimately like how the speed at which these miners are playing this lottery to get the next block on the Bitcoin blockchain. I think it's interesting to bring up some like the big influencers in the Bitcoin space. I mean, for example, Dan Held has said that ordinals are good for NFT on Bitcoin, and they're good for Bitcoin. It's good because it brings more financial use cases to Bitcoin, and it drives more demand for block space, aka fees. Obviously, what this article that Gareth Jenkinson wrote, his take, Dan Held's take, is that if you pay a transaction fee, it's not spam. Bitcoin is permissionless. You can't stop people from building it anyway. But it's really interesting at the same time, though, right? That people, I mean, as with lots of things in crypto, people take it very personally. People take it to heart. Sam, how are you on this? Are you on the fence, or do you have an emotional, knee-jerk reaction to this thing? Driving your own ordinals?
No, I am not involved in the ordinal market. I know that's a surprise, but no. I mean, I think it's a net positive for the culture in the sense that people are actually using Bitcoin. I think that it provides another use case, as you mentioned. I don't understand really a lot of the extreme negativity around it that I've seen. But overall, I think it's a net positive. I'm not really involved in that aspect of Bitcoin. I mean, it depends on which aspect of Bitcoin draws you in the most. For me, it's always been the monetary aspect, just given my background. But I like to see more use cases come out of Bitcoin. So I don't necessarily have any kind of really strong opinion either way with respect to this mini trend that's kind of emerged the past, I would say, few weeks or month.
Okay. And do you think there's ever going to be a market for these things to be sold? You know how NFTs were, yes, it was all about, digital ownership. I can now like show this thing on the blockchain. But really, it was all about the money. You could sell this thing or buy this thing that in a few weeks' time might be worth a lot of money because Paris Hilton was shilling it on whichever late night show. Is this what's going to happen in the Bitcoin space? Is this what viewers should be aware of? What do you think, Marcel?
I think we got to remind the viewers that before Ordinals existed, or I think it was the original project from or before shifting to NFT, people wanted to buy certain Satoshi, the Satoshi that was mined on the block in 2011 that was not mined by Satoshi, etc. I think that Satoshi is more worthy than the current one. So people were already paying additional money for Satoshis that came from specific blocks. So that's some kind of NFT, and that has value for some people. So I do think that even if you can have the same image, the same monkey image that I have, if my monkey has been inscripted in the block 800,000, and some people think that that's worth more than the others, I think it's a free market. Let the market decide.
Interesting. Okay. I was hoping that one of you might be like a staunch anti-ordinals guy, and it could be like a really fruity discussion. But that's all right. I mean, I'm just wondering if there's anything we should really discuss with the ordinals things. Personally, I don't know how long this is going to stick around, but it is quite cool seeing more people come over to Bitcoin because they want to put pictures on the blockchain. Like, if they want to learn about sound money and the monetary policy that hopefully the world ends up embracing because of wanting to inscribe a monkey onto the Bitcoin blockchain, then all power to them. Good for them. But yeah, the key point of this article, though, was of course that the block size has increased, and the longer term question to ask for that is, could ordinals be some way of solving what a lot of people predict will be an issue in say 5 or 10 years time, when the block reward subsidy will be so much smaller, because we're at 6 Bitcoin right now every 10 minutes, and in a year and a half it'll be 3 Bitcoin. In 10 years time, it's going to be less than a Bitcoin. And if Bitcoin's at 20K in 10 years time, then miners aren't going to be very interested in mining those blocks. So could ordinals be the way out? Could be the fact that, in 10 years time, we'll be sending legal documents on the Bitcoin blockchain. Could that be the way out? Marcel is shaking his head. It's a no. Why is that?
I don't think so, because as I explained, they are using a space that was designed for security, for additional witness and SegWit transactions. So they don't pay an additional fee for this 4 megabytes space. They only pay for the regular transaction. So I think that's kind of unfair. So I don't think that the price they are paying, like 1 Satoshi per byte, 2 Satoshi per V byte. It's going to be enough to sustain after the subsidy, the block subsidy goes to 3 or goes to 1.5. I don't think it's enough.
Okay, fair play to you. Okay, cool. I just want to say a quick hello to Natus Blesses in the chat. It's very kind of you to say to drop in and to recognize our new YouTube channel of Cointelegraph Markets Pro and Research. But with that, we come to the end of our article discussion, and we're moving on to a quick crypto tip. So today we're talking all about using leverage with extreme caution. As you may know, leverage enables you to hold a much higher stake in a trade than the actual capital in your account would otherwise allow. It's basically like a mini loan. Though this may seem appealing and you might want to click on it, and can sometimes lead to significant profits, it can also lead to huge losses and getting wrecked effectively if the leverage turns against you. Successful use of leverage is a balancing act between risk and reward and takes a lot of practice to master. For Bitcoin beginners, leverage use with extreme caution and preferably avoided altogether. That means just buying at the spot price. Once you've developed your confidence, some experience in trading, then maybe touch the leverage button. But before that time, don't even think about it. Only the most experienced traders with sound market knowledge should adopt leverage as part of their Bitcoin trading strategy. Don't forget, as always, to subscribe to the channel and to drop a comment or question, as you could win a Cointelegraph Markets Pro subscription. Okay, Marcel, the floor is yours to talk about your tip this week, or your trading insight even.
So today I'm going to talk about my favorite cryptocurrency. You may have heard me talking about that, and it ain't Bitcoin. So it's my favorite negative position, where the coin that I would never hold. And we're talking about the stablecoin Tether. So I'm going to explain you why I have so much prejudice, negative feelings against the stablecoin Tether. First of all, it was created by the exchange Bitfinex, which we all know that was hacked back in 2016. I don't know, for over 100,000 Bitcoins. And this exchange lied to the customers multiple times. For instance, in 2018, Efinex, the holding of Tether and Bitfinex, lost about $1 billion that was seized in money that was on crypto CCC, crypto corporate holdings, because Bitfinex by that time lost banking access. So they had to use a fiat gateway payment, which was CCC. And this CCC company was also laundering money in Europe. So money from Bitfinex clients and from Bitfinex company was taken away by governments. So Bitfinex lost $850 million from clients in 2018. And later the government found out about it, and the company was fined in $18.5 million in 2021. And also, there's a lack of auditing, which is different from attestation in Efinex. So there was never proof that the $20 billion or $30 billion are sitting there on bank accounts and US treasuries. There has never been an audit, which is different from an attestation. And the company always say that they're going to do it in a few months or next year, but they have never done it. And Tether was created in 2014, so 9 years ago, and no audit. And remember, there was also a piece on Reuters and Bloomberg this year, 2022, saying that Efinex was facing ongoing investigation by the US regulators. So I don't think that's a stablecoin that you should be running away from Binance US dollars. Moving into Tether, think it's safer, because it's not. So don't do it.
Good stuff. Thanks so much for that, Marcel. We're also going to have a final newsquake, which is all about Markets Pro, from myself. All right then, guys. This week we're talking about Joe, not me, but the token, as part of Markets Pro. As newsquakes are these alerts which instantly notify users when market-moving events happen. Thanks to them, Markets Pro subscribers like yourself can beat the crowd to the most important news of the day. On February 6th, a decentralized exchange called Trader Joe partnered with the interoperability protocol Layer 0 to convey its native token, JOE, or Joe, into an omni-chain non-fungible token, OFT. A newsquake immediately informed our Markets Pro subscribers of this news when Joe was trading at 22 cents on the dollar. Just 5 hours later, the price had soared 32% to 29 cents. You could have been in on that trade if you were subscribed to Markets Pro. And the second segment we're looking at this week is the Vortex score, which we've talked about before on the original Cointelegraph channel, and it's the first time talking about it here today. So a Vortex score is all about what the coin is doing and what its market conditions are doing. A Vortex score of 80 or above is considered very bullish, and a lower score than that, but mostly 30 or 40 and lower, means bearish. So bullish buy, bearish sell. The frequent top performer, IQ token, had another great week. On February 7th, its price was 0.006 cents, or $0.006, sorry, when a green score of 77 alerted Markets Pro subscribers that the asset was trading in accordance with historically bullish conditions. So these are things you can get advantage of if you subscribe to Markets Pro. The price soon began to climb, and 2 days later, it peaked at $0.008, an increase of 33.33%. You could be in a chance of taking advantage of these tools and these trading advantages if you subscribe to Cointelegraph Markets Pro. And don't forget, there's 20% off Cointelegraph Markets Pro in the YouTube description just down below. Wonderful. Back to the show. Who's still with us in the chat? Natas Fress is still here. I guess we need to sound the alarm about the fact that we have a new channel, Cointelegraph Markets and Research. This isn't just a Valentine's Day special. We're here for the long term, lowering our time preference. Guys, that was a very fun show together. Is there any takeaway or any lovely message you'd like to share with people around the world today? Sam, maybe some words of wisdom on this day of love.
Well, love your future self and consider Bitcoin for your portfolio. That's really the only potential words of wisdom I have. I mean, obviously, do your due diligence, do your research. As you know, the crypto market has a lot of potential in it. There's a lot of potential money to be made, but it's also highly volatile. Bitcoin has withstood the test of time. It's the OG. It's been around for now almost 15 years. So there's a reason why it has been so durable and has provided so much longevity. So just make sure that you stay safe, and we're still in the early days of the next cycle. So manage your expectations and try to think rationally and critically about your portfolio and what kind of exposure you want to digital assets.
Fantastic. If the social media team is watching, then that is the clip you need to clip there. Love your future self and buy Bitcoin. Marcel, any closing comments?
I would say, Joe, people need to take more care of their bodies, including visiting family and friends, because it doesn't matter if you trade cryptocurrencies or stock market or real estate assets, whatever. There's always going to be ups and downs. That's how financial markets work. And if you're not ready for that, you can definitely buy some land farm and raise cows and do other stuff in life, because any kind of asset, no matter if it's Apple, if it's Microsoft, if it's bonds and convertibles, it doesn't matter. There are cycles. So you need to be prepared for them. You need to invest for the long term. And if you are getting now into cryptocurrency, I urge you to have at least 70% of your crypto position in Bitcoin. Don't go all in on altcoins, even if you think there's a bull market ahead of us. Please don't do that.
Okay, 70% in Bitcoin. Not financial advice, just a theoretical idea. Fantastic. Well, that was a great first show, new channel. Thank you very much for tuning in, everyone. Remember, there's still 20% off in the description just down below. And yeah, I hope that you and yours have a wonderful Valentine's Day. And if you're alone, don't worry, we're here for you. And Bitcoin is always there. Thanks so much, guys. Have a fantastic